Hello, this is the TradeSight U.S. Stocks and Futures Market Preview for the week beginning Monday, the 17th of August, 2015, and ending Friday, the 21st. Hope you had a good trading week. Here's a look at the ES front month futures contract daily chart. Once again this week, back to touch the 2062.50 cosmic number that started back in Thanksgiving of last year. If we're still there this year for Thanksgiving, which is just now, strangely, to September, to October, 3 months away, so it's been 9 months almost, then that'll be a full year. We've been trading frequently at the same number in a narrow range. First time I remember that in all my years in the markets being this flat. So as you can see, nothing new to report about where we're at. We're still stuck in what has been about an 80-point range on the S&P since mid-February, and not much more than that, expanding back a couple months prior. Hard to get any exhaustion counts when the market's not moving. You don't get exhausted if you stay in place, if you know what I mean. So for the session on Friday, after a flat opening, the S&P gained 8 points. There's the S&P cash index. NDX was up 11. Most of that was in the last few minutes of the day that we kind of came up a bit. SOX, though, was down 3. That doesn't really look positive. There's nothing holding SOX up here. Any selling at all could really send that lower. And here's the biotech, same thing. As go banks and biotechs, so go the market. That's the old expression. You take the semiconductors down with it, and nothing looks pretty. So I'd say the broader, or the smaller sectors paint a more negative picture of what's going on than the market, which is so flat. Here's the Google was up 2.5, almost 3 points on Friday. Still holding up after all the news that they've had with earnings and the renaming of the company to Alphabet. All very exciting. Apple stuck against the 10-day moving average, up 81 cents on Friday. The VIX closed at 1283. That's down 66 cents, representing no volatility, which we clearly don't have. Crude oil dipped under $40 a barrel for a moment. Came back up to close at 42.12. Boy, that is some ugliness for oil bears, obviously. Gold futures down $1.30. This is a weird time of year. Let's go back to this oil thing for a second. We'll come back to the trend. Keep in mind, every year we usually see oil prices move up starting in May and June into what is typically the hot summer months, because you need more air conditioning, more energy, and also the hurricane season. We're in hurricane season right now. Maybe just the early part of it for the most part, but we're here, and boy, oil just does not care. It's very unusual. Strange things going on in the markets. Here's the trend. Closed at 1.14, which gives us a moving average of 1.10. Nothing there is really a reading. Advanced decliners on Friday were 598 positive on the NASDAQ. 10-day moving average of the advanced decline ratio is actually negative 244. So just to say, a little more negativity internally in the market than what you're seeing necessarily on the indices. Volume on Friday. Now take a look at this. We don't get a lot of days where NASDAQ volume closes under 1.4 billion shares. Keep in mind, you see 3 of them now so far this year. Well, 5 if you count the first 2 days of January, but that was that's the Thursday, Friday after New Year's, right? So those were still kind of holiday mentality. But I will point out that the one you see in July is that little day around 4th of July, so that's essentially a holiday. And in June we had one. It was pretty late. I don't know that I remember that one being. It's not a holiday. Something must have been going on that slowed things down. But that's it. And so here it is, Friday, 1.38 billion shares. That was some pretty weak volume. Let's say, but it's interesting because August so far, separate from that, has actually been all right. We've had even Wednesday was almost 2 billion shares, and we've had over a 2 billion share day. It's beating July, and we've had some really clean moves as well. I talked about this going into the month. I'll give you a look at another one here on an intraday basis. Well, let me pull up the daily chart first. SBAC, this was our top long pick for the session on Friday, over 126.65, which is the breakout from back in March. And if we go to the 5-minute chart, really clean play. Triggered over that 126.65 number right here, and then, ran up, pulled back to retest, and turned and went better. They don't get any clearer than that on a daily chart breakout. That's exactly what they're supposed to do. So it is interesting. We're getting very clean moves. This is what we talked about coming into the month. It's just that, volume can be hit and miss, and certainly a lot more miss this last week. All right, let's go to 10-minute candles on the futures so we can see the whole week and see what we got. So came in from last Friday. We had gapped up and drifted higher on Monday. Monday wasn't too exciting. Tuesday now, we get the gap down. This is on the first devaluation of the yuan out of China. Gap down and eventually headed a little lower. That did fill the gap from Monday. Wednesday, another devaluation. Gap down, was heading lower, and then over lunch we recovered, came back all the way up to fill the gap. Thursday, small gap down, filled it over lunch, closed basically flat. Friday, open flat, drifted higher. So we have not closed the gap from Monday's close going into Tuesday. On the ES, the broad market futures, here's the NQs. Looks very similar and the same deal. We have not filled that one gap. Everything else filled for the week. And then, the interesting thing is, for example, with an hour left on Friday, the NASDAQ was exactly where it was the prior Friday. And if you go back and look at the ES, we're up a little bit for the week, but overall about 10 points. Nothing too spectacular. All right, let's take a look at our economic data calendar for the U.S. here and see what we've got the week ahead and where's the key points going to be. First of all, number one, Friday is options expiration. Okay, it's a single expiration. We know Friday is going to be completely slow. Don't blame anybody for taking off, especially after the first hour. And just note there is no economic data Friday morning. Monday, Empire Manufacturing Index, NAHB Housing Market Index, net long-term tick flows. Tuesday, housing starts and building permits. None of this so far matters. Wednesday, the MBA Mortgage Index, but then the CPI, that's a big number that can move the market, although the expectations of inflation are pretty low. Wouldn't really expect to see it suddenly appear. Crude oil inventories, the minutes of the last Fed meeting. Thursday, initial and continuing jobless claims, existing home sales, Philly Fed, leading indicators, and natty gas. So obviously Thursday is the big day for data. Now, with options expiration comes the options unraveling move if there's enough options positions out there. That usually happens Wednesday or Thursday. So we've got Wednesday and Thursday, the days I would expect the most excitement this week. You've got the CPI, you've got a lot of data Thursday, the potential for options unravel either of those days. Probably not Tuesday. Monday, they've been real slow so far in the summer. That's common. Friday, I'm not expecting much, and I don't think I'll be here for most of the day. So that's it. That's what the week looks like. Everybody have a great week. And charts, as usual, brought to you by eSignal. If you have not taken a trial of our services, feel free to do so. If you do find these videos useful, please like them on YouTube. It does help us out. Have a great weekend, great trading week.